this data is key this week, should have a big effect on how we're looking at the Fed, how the dollar's going to move. What we saw from Fed rate cut expectations is they were pulled back. If we have the other piece of the pie this week, you could see those rate cut expectations pull back even further. Some of the big US banks are already saying they don't see another rate cut from the Fed. Hello and welcome to ATFX. What we're going to look at today, we're going to look at the two big inflation numbers that we've got in the coming days. We've got the big CPI number coming out of the US and we've got PPI numbers as well. Should have a big effect on how we're looking at the Fed, how the dollar's going to move and how the rest of the market moves. So we're going to look at euro, we're going to look at dollar yen, and we're going to look, of course, at gold, which has already powered over 7% higher since the start of the year. The Fed's dual mandate, they're still looking at employment numbers and they're still looking at, of course, inflation, which we've got this week. Last week's employment data came out quite close to expectations. Yes, non-farms was slightly lower, coming in at 50,000, but we did see the unemployment rate come in more favorably and average hourly earnings did pop up back to its normal, what might feel is normality if you've been looking at the data for the last year or so, plus 0.3%. So what we saw from Fed rate cut expectations is they were pulled back. So this month, 95% market pricing in, no move from the Fed. March was what people were looking at. It was up at 40% for a rate cut of 25 basis point. Now we're down under 30%. So it has moved and that's helped to strengthen the dollar. Now, if we have the other piece of the pie this week, which is still strong inflation numbers, you could see those rate cut expectations pull back even further, move down the curve. Some of the big US banks are already saying they don't see another rate cut from the Fed for the rest of 2026. So this data is key this week. Traders will be watching it and markets will move hard. Summing it up, month-on-month CPI data that comes out Tuesday in the New York session, expected to come out plus 0.3%. That's both the core and the headline number. The year-on-year data plus 2.7%. PPI, slightly different story. We've got that coming on Wednesday. Core PPI expected to show a 0.2% increase, and indeed the headline PPI number a 0.2% increase as well. So anything 0.1 will see a deviation from those expectations, will see moves in the market. We're going to go and have a look at a few of the charts, see where we could see some potential trading issues. So here we are kicking off on our daily gold chart. Now, as I said already, here's the start of 2026. There's the low. We saw the low down at 43.09. We've now seen a fresh new all-time high up at 46.29.94. That represents over a 7% increase. So we're seeing the same pattern that we saw all the way through 2025, kind of down there, 2,630, 75% increase in gold, and it's taken off again at the start of the year. We're only on the 13th of January and we've already seen 7%. It does seem the same move. Now, geopolitical concerns have helped to drive gold higher. Silver, as well, as we know, has jumped on that bandwagon and seen multiple percentage increases as well. It's going to be interesting to see later in the year if we do see a calming in markets, if we do see sentiment kind of hitting back, if gold continues to trek higher. Now, stocks have continued to move higher as well. So it's a similar pattern to what we saw during 2025. But looking at gold as a trading opportunity on this US data, weaker data, if that starts to bring in those rate cut expectations, we could see gold move higher as dollars sold. Obviously, there's not much in the way of resistance on the top side. Last night's high up around 46.30. If that breaks, it does take us away. And to be honest, for many, we could see 4,700, even 4,800 over a longer term projection. Now, a lot of the market is leaning after, don't forget, last month's data came out after the government shutdown. There was a lot of what we're calling fog around that number. There's some expecting that the numbers coming out in January, representing what we saw, a better data set in December, could see stronger numbers come through. That would see the dollar bought gold return to lower levels. Now, initially, we're going to see some support coming up. This is not the best trend line, but it's not too bad on the daily because it's been going so steeply in an upward trajectory. Support, I suppose, initial support is going to come out on last night's low, which is around about 45.12. This trend line's coming in around about the same level as well. Then longer term support will be on this longer term trend line, currently at around 43.62. But Still with gold and I suppose with silver as well, plenty of opportunities, plenty of volatility because we've seen such big moves. Now we're going to go and look at a couple of currencies. We'll start off with euro. So here we are on the daily euro chart, and we've got a few levels here, but it does make some of the trading opportunities a little bit clearer. That 200-day moving average, that will be the initial resistance coming in at 117.24. Longer term resistance now just under 118. The figure support, that trend line support 116.30. Previous lows here 116.20. You'd want a clear break along there. Actually, that was the 20-day moving average I mentioned before. Here's the 200-day down at 115.81. That makes a lot more sense. Not quite sure how that one jumped in there, but support will come in around that 116.20 level. So stronger numbers. Expect euro to have a little look to the downside. A break here could test those quite close 200-day moving average levels, and then it opens up the way for sort of levels down here, 114.88, and then this low back here in November down at 114.70. That's the kind of move we could see on stronger data. So CPI, if it comes out above 0.3, well up on the yearly, if it comes out above 2.7, if we see a 2.8, 2.9, expect the dollar to take off those moves. Obviously, negative numbers, euro will move to the top side. Initial resistance will be coming in just underneath 118, the figure. Going to go and have a quick look at dollar yen and we'll wrap things up. So here's the dollar yen chart dailies. As we can see, dollar has been pushing higher. Bank of Japan not happy with it. We've had some comments out early today in the Asian session that Bank of Japan are not too happy. They're in consultation with the Fed, but for now the market is dictating these moves. Saw a big move up just at the end of last week, up 0.64%. We're banging against these sort of these are probably pretty weak resistance lines at the moment. I would be saying a break through these highs here would probably take us up to 160 fairly easily. And then we're looking back to this previous high there. Look, 157.96, we're above that anyway. So then it's back to these multi-decade highs that we saw back last year, up around the 162. So a clean, strong number, like I said, 2.8, 2.9 on the year-on-year CPI, 0.4, 0.5 in the PPI numbers. These could take us to 160 relatively quickly, especially in dollar yen. Conversely, of course, I'll bring this chart back in so we can have a look. Dollar would get sold. I would think we'd fill in this gap fairly sharpish, back down to 157. Breaks of these level here. Next support line well underneath 155. So the potential for moves is massive on this data. Don't forget we've got geopolitical updates as well. But stay in contact with us. We'll be keeping you up to date with all this as we go through the week. It could be very, very punchy. Thanks for tuning in and good luck with your trading.